it does have an incredibly powerful brand. It has extremely loyal customers, and it does have international momentum. And the question, I think, is can it reinvent its product mix, and can it fend off the competitors?
Kenneth, how we getting on?
How you doing, Mike? How are you this week?
Got some fun facts to open the show today. So, what do you know about the island of Anguilla?
Nothing.
Anguilla.
Zip.
Yeah, I was the same up until last week. So the thing about Anguilla is, do you know how every country gets its own like internet code? So, like an Irish
Yeah,
website is
yeah,
.ie,
yeah.
French website is .fr, and so on and so forth, or whatever.
And then the Italian one is IT, which sometimes is useful. Like, if you had a a company called Eat, you could have Eat It, eat.it. So yeah,
Yeah.
got it.
Well, that last point is very prudent right now because Anguilla's company internet code is .ai.
Oh, wow. There you
Yeah.
go. I'd say the
So
locals are absolutely delighted with the with the change in events in the technology scene.
so they brought in 40 million quid just from selling domain sites, domain titles for the last year.
So I don't mean to put you on the spot, but approximately where is this place?
Anguilla's in the Caribbean. It's like
Oh, it's
tiny
one of the
little
Caribbean
island. It's
islands.
like the size of Barbados or something.
So
It's big.
40 million is a lot of takings for a country of its size.
Oh my god, it's like it's going to be like 20-30% of the economy is just selling website domains. Apparently one of the HubSpot founders bought the domain uyou.ai for 700 grand in one go.
Oh my goodness. Wow.
Imagine just like this absolute gold mine arriving at your
Yeah.
doorstep one day. The lads are laughing.
Sitting there in the middle of the Caribbean for 10,000 years with nothing going on commercially. I don't even want to say anything disparaging about their actual economic situation, but it just doesn't, even the fact that we haven't heard of it, it isn't an economic superpower. When all of a sudden, even you telling me there's a .ai, I'm
Yeah.
thinking, oh, my Wall Street needs to buy profit.ai. That's for sure.
So it's bringing in, it's going to expects to bring in 50 million quid this year from just website domains alone.
Well, fair play to them. Hats off
Yeah.
to them. Good
Thought
luck
that,
to them, as we say in Ireland.
I thought that was great.
That's amazing.
Yeah. So where are we going today? Do you want to give a little profit?
Yeah, for sure. Well, as you know, like speaking of profit, well, my Wall Street is a business that's gone through quite an amount of change over the last 12 years. Every business has, but my Wall Street, like the rest, has changed a lot over the last decade or so. And profit is our first AI proof product. Well, apart from in life human get-togethers like Investicon, which really can't be toppled. But profit is our first AI proof business. But it's a very important change for us because right now today there are 50 billion free stock opinions live on X, and AI is the place that a lot of new, younger investors are going to decide what stocks they're going to buy. So AI and the court of public opinion is wide open. So you need to have a system that is going to outmaneuver the rest of them, which is why we launched Profit. Apart from the fact that we were building it for nearly 17 years, measuring it, monitoring it, tweaking it, refining it, moving it to Rackspace with NVIDIA chips. And we now have a beautiful product that our listeners can try free of charge for 7 days at useprofit.com/MWS7. Think of my Wall Street, 7 free days. Use profit.com/MWS7. I really strongly suggest you at least go in and give it a trial because the results and returns from this system are unlike anything else out there. So that's all I wanted to say. Top of the show, quick advert for the stuff we do.
Brilliant. Okay. So I wanted to talk about a stock today that's very on topic, which is Nebius. Have you heard of Nebius?
Never. No.
Yeah. So it's making all the headlines. Essentially, what Nebius does is, do you remember we talked about CoreWeave on this podcast
I
a
do.
couple of
Yeah.
months ago?
Actually, their stock took a big move in the last few days. I think it got thrashed. It fell about 20% or something.
So yeah, it had like a stupid run from IPO for the first 3 or 4 months, and then it's kind of been on the
Yeah.
way back down. It's kind of cooled off. I think we panned it. Like, I can't remember
Mm.
exactly why, but I remember we panned it, and I remember it doubled in about the space of 2 weeks after that episode. But Nebius is kind of a direct competitor to CoreWeave, except it's got a bit more international presence, and it's
Right.
not just US based. But it describes itself as a full stack AI infrastructure company, providing GPU powered cloud computing specifically for AI workloads.
Mm.
What that essentially means is that if you're an AI startup or a research company or whatever you're doing, if you want to build Emmet.ai, first of all, you have to go to Anguilla to get the website domain. But after that, you can go to Nebius and you can essentially just rent the computer power, the infrastructure, the NVIDIA chips. Like, it's a huge partner with NVIDIA, all that good stuff. It's not dissimilar to what AWS does in a sense with servers, except it's very AI native. But I'm talking about it today because the stock is up. Just check. It is up. It's up 32% at the time of speaking. It was up as much as 60% last night when I announced the news. So basically, it
Wow.
signed this absolutely blockbuster deal with Microsoft. The news came out last night. It's a multi-year contract worth up to 19.4 billion. So that goes up until 2031. And essentially, it's going to supply computing power and GPUs to Microsoft that Microsoft needs because it's doing all its AI business. So I just saw it. Absolutely, I decided it took over my Twitter feed, and I just read into it, and I was like, "This is a crazy one-day move." But the extent of how much that single contract makes in terms of Nebius's whole business, I think the annual revenue from that 19.4 billion spread out over whatever it is, 7-8 years, is more than, like, its annual revenue forecast for 2025 alone. So it's just a kind of transformative contract, and then in one fell swoop, this business has just achieved the next level, and then maybe even the next level beyond that again. And so it's interesting because there's a time where maybe there's a bit of fatigue with AI. There's too much hype. There's not enough ROI. I think Sam Altman came out a couple of weeks ago mentioning an AI bubble. And it tends to lend itself, like, as in, we've seen stuff like this happen before. It's hard not to believe that there is a bubble. I mean, Nebius is up, I think it's 360% since its IPO in 2024, last year.
Mm.
CoreWeave was similar in the space of about 3 months. Like, as in, those moves are not normal. And we've seen it with especially the kind of the pick and shovel plays. So where those AI bottlenecks are happening are with computing power, with cooling, with Goldman Sachs, I think, published a report yesterday about water. So these pinch points where the hyperscalers, the Googles, the Microsofts, the Facebooks, they want to move as fast as humanly possible. And things stopping them are things like this. And Nebius is one of those, we'll say, gatekeepers at those pinch points. But obviously, if you're seeing this and you're seeing this kind of demand, or the expected demand, there's so much potential built into these companies. And so, yeah, you can get a bit shaky if Sam Altman, who is kind of the poster boy of AI, as we know it in this modern form at least, is coming out and saying, yeah, maybe it is a bubble. You would back off. And especially companies like this, these pure plays, are the first to kind of suffer.
Yeah.
So obviously there was a small bit of concern in the industry. The market kind of went sideways for a couple of weeks, but then deals like this with Microsoft, where they have huge, obviously, demand. They also have their own huge computing power as well, and then they're going to Nebius because they need more. It kind of is putting two fingers up to that idea. Maybe not of a bubble, because I don't think we can say it is a bubble or isn't a bubble yet. Like, it most likely is, or there's bubbles in certain parts. But in terms of demand, the demand is staying there. And I think this is a more significant deal than just one single company. More so of what it says for the wider AI market, and where people's where the money is being spent. Because we saw Nvidia, there was talk about, will Nvidia slow down, and it didn't. Do you know what I mean? And Jensen Huang came out and said he thinks they're going to be $3 and $4 trillion spent a year in AI infrastructure alone by 2030. So there's
Mm-hmm.
big statements, and it's very easy to get behind because you see it happening around you. And it's very easy to doubt them as well because look, it can't go on like this forever. But a deal like this is kind of saying yes, it will, and that's why I just wanted to highlight it. We're not going to go into it too deeply, um, but I just think it's interesting. I think Nebius, I think CoreWeave, they're calling themselves this emerging like neo cloud sector. So just a very AI native kind of similar to what AWS does or Azure does, but specifically for AI native apps or startups or whatever else. So yeah, I thought it was interesting. CoreWeave was up about 8 or 9% on the news as well, and we're just seeing it more and more where companies like this. And we've always talked about AI as like the most well-resourced companies are probably going to benefit the most, and that's what happens with a lot of new technologies.
Mm-hmm.
And we've seen it
Yeah.
with the hyperscalers. Whereas a company like Nebius, a company like CoreWeave can kind of make it more um, they don't ring fence it as much. Do you know what I
Yeah.
mean?
Yeah.
And
Well, the
now,
fact that you can have a bunch of pizza eating kids in a basement building an AI platform, thanks to CoreWeave or Nebulous, kind of democratizes the access to that technology, which only a year ago was so expensive, was like off the scale. Like the cost of trying to get an NVIDIA setup, as we did in my Wall Street, is just so high. And all of a sudden, you can only presume that those barriers are being eroded. But you know what they say about a bubble, Mike? A bubble is a rally you missed. So,
mm,
yeah, it was a bubble. Yeah, because we didn't buy it. I'd also say that I think in the history of humankind, AI, it's fair to say, is so new. It's been around. It feels like a millisecond. So we're going to see every aspect of the business model that presented itself in the traditional internet model start to present itself in the equivalent AI context, like the point you made about domains with a .ai top level domain are now suddenly a hot ticket. Whether it's the hosting via racks, I mean, say CoreWeave or Nebulous, or whether it's about the development tools or in fact the businesses that are just exploiting the technology. It is just the dawn of humankind when it comes to AI. So I think an awful lot of water has yet to flow under the bridge, as it were. But that is one I'm going to put on my watch list and start to keep an eye on, because if Microsoft outsources something to you, you can
mm,
take it you're doing something well. So I'll be quite curious to see what is it that has them in that pole position, because they're in there now.
yeah,
So I'm not saying that nothing can't be replaced, but certainly the complexity of what they're allowing Microsoft to shovel off the excess onto is obviously quite high.
yeah, absolutely. And it very much seems like the kind of bellwether right now.
Yeah,
In
yeah.
in terms of, is there waning confidence? Well, actually, no. Geez, this is Microsoft putting down 20 billion quid,
Mm,
saying no. There's absolutely no waning confidence. So, thought it was interesting. I thought it was worth pointing out. And anytime a stock is up sixty
yeah.
percent or whatever it was in the space of a couple of hours, it's always worth a little shout out.
Well, I'm going to talk about one that's down about 60% since the year began, not in the last few trading hours. And it's almost the opposite of AI. And it is that sports apparel yoga mega brand Lululemon.
Yeah.
And in
So I saw
preparation,
this
yeah,
headline yesterday. It was the worst
yeah,
performing stock in the S&P 500 this year. Is that correct?
that is correct. And I launched a tweet there yesterday. We're recording on Tuesday evening as opposed to Wednesday morning again. And I put out a tweet yesterday saying that I planned to dive into Lululemon on this week's Stock Club, and I'd love to hear your take. So I asked my Twitter followers to vote in a poll. And before I go there, I want to say to our listeners, please follow me on Twitter. It's at Emmet, EMMETL Savage, at Emmet L Savage. Follow me there, because I random musings that are going to accelerate in the weeks and months ahead. Hopefully some of value. So hopefully some of huge value. The other day I tweeted the list of all the CRISPR stocks I'm watching, and I was quite surprised at the engagement it got and the thousands of views it got and all the rest. But anyway, Emmett L. Savage. So yesterday on Twitter, I launched this poll and I asked people to vote and also to comment on their view on Lululemon. Now, half the people, so as of this moment, 66 people have voted, which is probably statistically significant enough for us to have a conversation about the actual poll. So half of them never purchased from Lululemon, which means that's very easy. For the remaining answers, we just double it to get the kind of percentage weighting. So 82% of the people who have engaged with Lululemon or purchased a product still love their products, which I think is quite interesting. Or in other words, 41% of people who responded to the poll, but in fact, 82% of the people who've engaged with the product still love Lululemon gear. 16%, which is double the 8% who said, 16% used to love it, but now they've moved into the meh territory. So, like for those who have bought the Lululemon gear and voted in my poll, 16% of them are not too keen, and then the remaining 6% actively dislike their gear, don't like Lululemon. So just again, just to summarize that, if we minus out the people who never purchased from Lululemon, 82% of them are still brand evangelists, and the remaining percentage are somewhere between dislike and meh. But that's not insignificant. Also, I asked people to leave a comment, and the two that are live at the moment while we're recording, the first came from listener Ashwin, who said, I am contemplating my position. However, I've been buying their apparel for a few years, and I've been generally impressed, and I'm pretty tough with my clothes. I used to scoff about them offering men's clothing, but I have been converted. So that was Ashwin's comment. And the second comment, which I thought was very interesting as well, because they completely resonated. My personal opinion was, I live in a wealthy American suburb. Kids all wear it. My daughters love it. Moms all wear it. I don't think it's going anywhere. And I just found those between 82% of those who engage with the product still loving it, and just those two comments from people observing, I guess, the strength of the product and the strength of the brand, for me kind of was not negligible information. But what really matters, we're talking about a multi-billion dollar business. So I thought it would be fun to dive in a little bit deeper and talk about the story of Lululemon.
Okay,
So
sounds good, Jeff.
well, every story, every business's story begins with its founder. That's just the fact. It starts with a person, a woman or a man who is sitting down one day and conceived or happened across an idea that they executed upon excellently. And Lululemon Athletica, as it's more formally known, is, as I think most of our listeners know, probably one of the top 3 or 4 most recognizable names in the Western world anyway in activewear. And it was founded in Vancouver in 1998 by a guy called Dennis Wilson, also known as Chip Wilson. Now, he was not a typical corporate person, to put it mildly, and founders rarely are corporate beasts. They're like an entrepreneur with a vision, or an entrepreneur who happened across an opportunity, as I said. And his vision was to merge technical athletic apparel with the booming wellness culture of the late 1990s. But he was absolutely a lightning rod for controversy. Like, the guy really, I remember watching him, and you could just imagine in Bloomberg, he had teams of advisors on PR and people around him, because the guy was a bit of a loose cannon. And he kind of cultivated this kind of quasi spiritual corporate culture around Lululemon, and he filled the stores to help, to this kind of self-style manifesto, and insisted that his brand would transform lives, not just make you look good and more comfortable and keep you warm and keep the rain off your shoulders. And I was an early shareholder, probably something like 15 years ago. And I remember this guy very well. And he was totally notorious for his public remarks. What was the founder of Uber? Is it Travis Kalanick? Is that his name?
Yeah, yeah.
Yeah, he also was a bit loose lip, sink ships, and that guy Travis Kalanick and Chip Wilson kind of reminded me of each other, because they said things that just varied from controversial to being quite insensitive, to be honest. And in fact, in one infamous 2013 Bloomberg TV interview, he suggested that, quote, some women's bodies just actually don't work for Lululemon pants, which understandably was a comment widely seen as body shaming. And years earlier, he had resisted expanding into plus sizes for Lululemon gear, saying it would compromise the brand identity. And people were commenting that this was building a perception of exclusivity, and that Lululemon was not for everyone. And even though it alienated some people, very understandably, it also created this sense of identity amongst its target customers, who are affluent, fitness focused at that time, women who viewed the brand as aspirational. But now in 2025, with hindsight, his Chip Wilson's remarks, it really did create two things, a double-edged sword. It created a lasting damage and a brand strength. So that kind of controversy amplified Lululemon's name and recognition. But as they say, it left scars to heal, which I can't even say if they're fully healed to this day. But he stepped down as from the CEO-ship in 2005, which is before they actually IPO'd. But he left the board in 2015 after, quote, governance disputes, whatever that means. But his fingerprints, as it were, remain all over the company's DNA to this day, which is premium pricing, tightly controlled brand image, and a mission that extends far beyond comfortable and flexy clothing into community and lifestyle, and going into a shop and doing yoga in their retail store, going out for a yoga session with Lululemon in the local park, or whatever it is that they do. So he created this kind of brand mystique around basically sportswear. So here's the story of the business rather than just the story of the founder. And I'm going to try and wrap it up into, I suppose, a rather big nutshell. So Lululemon began as a single Vancouver design studio, and it, just as we've all seen, snowballed into this retail powerhouse. And its big break was the yoga boom in and around the year 2000. And its fabric, known as Luon, Luon, which I only assume is how the name was derived, although I'm not too sure about that. The Luon fabric is this stretchy, breathable, and pretty often a very flattering kind of material that leggings are made out of, and it became synonymous with this modern yoga culture. And by the mid 2000s, yoga pants were no longer something that were just reserved for doing yoga in the studio. They were seen out and about in the streets. And if you're in New York, you were living in New York in around that time. Is that right, Mike?
Uh, 2017, yeah.
Oh no, it was a bit later, but yeah, you know yourself, like Lululemon pants are worn out and about on the streets, and
Oh,
that kind of
100%. Yeah. I wouldn't have to say it's a New York thing. I would say it's universal. Like,
well, absolutely universal, but I think it's the first adoption of it being everyday, everywhere, where was New York, LA, kind of the coast of America. Either way,
yeah.
Lululemon leaned hard into this kind of shift in clothing and athletic wear, or athleisure, as they call it. Athleisure was the term that they actually came up with. So they positioned themselves as a sports brand, but not like Nike or Adidas. They positioned themselves as this premium lifestyle company. So it wasn't just about wearing a Lululemon top or pants. It was about the fact that you bought into the ideology and doing yoga in open spaces and having a healthy lifestyle and what is conventionally regarded as a healthy body. So stores doubled as community hubs, and they were giving, as I said, these free yoga classes and wellness talks, and sales associates were known as educators, and they were really meant to inspire instead of sell. And the formula definitely worked, because in 2007, Lululemon went public on the NASDAQ stock market with the ticker LULU, as I'm sure most of our listeners know, and it raised about $327 million on IPO day. And its growth was extraordinary. By mid 2010s, revenue was topping 2 billion annually, mostly fueled by the store expansion all across the 50 states of America. And products like the Align pant and Scuba hoodie were a hot trend. They were just well known by the kids in the street at that particular chapter of time. And like Lululemon proved that customers were willing to pay triple digit prices for leggings once they came with that brand cachet. So, there was probably a preconceived notion. I don't know for sure, but I imagine leggings were something that were double digit price, 40, 50, 60 bucks maybe. But suddenly Lululemon with that little, I don't know what you call it, alpha symbol on the back. It looks
Yeah.
like a Greek alpha to me. Anyway, suddenly people are paying over 100, 120 bucks, 150 bucks for leggings. So 1, 2, skip few, 99, 100. And by the year 2020, Lululemon had really achieved this cult status, and its products were omnipresent. They were in
Yeah.
airports and cafes and gyms. And as you said, they were just
Well,
everywhere,
and
wasn't
I
it?
think 2020 was a very appropriate year as well, because that's all people wore for about 9 months was gym gear around the house.
Oh yeah, you're absolutely right. The COVID-19 pandemic changed not only how we dress for every day, but also changed how we buy stuff, which everybody knows went online. And
Yeah.
I'll come back to that point in a minute
And I
because,
was about to say, yeah, that really
oh
feeds
yeah,
into Lululemon as well, and how they've completely controlled their own selling experience. Like, as in, there's no third parties with them at all, is there? It's just straight through their brand.
exactly, and probably courtesy of that virus that we all lived through, revenue doubled for Lululemon between 2018 and 2021. So it just blew past $6 billion, and sure enough, the stock followed suit because it was the hottest ticket, you might say, in casual athletic sportswear, whatever label you want to put it on it. But it was the hottest ticket and hottest brand, and now even at the height of the popularity, the company faced uh, reputational headwinds. So above all the other reputational headwinds was this long-standing resistance to having exclusive sizing. Are like, I think it's probably the right turn of phase, but inclusive sizing, I'm not too sure. But either way, Lululemon was kind of saying, if you're not slim, we don't want you in our gear. And they put different various messages on it, but it was clear what they were up to. I remember at the time they were saying, well, it's down to logistics and we can fit more product in boxes for shipping. And like, you're listening, you're sitting there listening to a quarterly call going, this is baloney. They just simply, if you excuse the language, don't want fat people in their product, and or I should say non-slim people, whatever the politically correct way of saying it is. And competitors like Nike and Adidas um, always allowed plus sizes, always provided plus sizes, but Lululemon was sticking this narrow range, saying that it was down to technical and brand identity reasons, brand identity constraints, if you can believe such thing. And really rooted in that was Chip Wilson's comments, and people remembered that because it wasn't that long ago. Now, however, since then, before we move into how's the business doing, since then they have backtracked and expanded size ranges, thankfully, because I'm a loyal and happy customer, and they attempt to project inclusivity, but the perception still lingers. It's very hard to come from those beginnings and then suddenly go, we are the brand of inclusiveness. And especially as body positivity has become a bit of a cultural and commercial force, it's very important uh, that businesses do what's right. And for a brand that was really accused of exclusivity, I think correctly accused of exclusivity, winning back broader trust is a slower process. Anywho, getting on to the story of, so that's the founder, and that's the kind of the backstory of the business and its growth. But since 2018, the business has been led by a guy called Calvin MacDonald, who is a Canadian retail veteran who previously ran Sephora's American business. So the guy totally knows retail, and he also knows the space. I think Sephora and Lululemon, you can just see a dotted line between those two brands, and you can imagine that someone who buys one more is probably more likely to buy the other brand. But his view is he wanted to evolve Lululemon beyond yoga pants, because that's kind of what they were. They were the yoga pants company. And I remember as a shareholder being in New York, going into a Lululemon place, and I was surprised at how little stock there was way, way, way back. They're all just these kind of mannequin legs up above eye level with these different types of yoga pants, and underneath, the ones that it just seemed to be, I just couldn't believe it was the success it was, but it was. But anyway, this guy, the newer CEO, Calvin MacDonald, who's there, as I said, for the last 7 or 8 years, he had this power of three growth plan when he eventually got his feet under the desk and started to do his business. The first pillar of the power of three was to double men's revenue, which I suspect was in large part driven by me because I wear something from Lululemon 365 days a year. Just always wear it. And that's only happened in the last 3 or 4 years. So his first thing was double men's revenue. His second thing was double digital revenue, enter coronavirus. And then his third thing was to quadruple international revenue, which I think most of our listeners will probably get a sense as to the success around those. So in fairness, he made great progress. Sorry, the business made great progress on all fronts. And men's apparel gained traction with joggers and shorts and outwear and stretchy trousers and stretchy tops and all that kind of stuff. And e-commerce, as we already said, went gangbusters as a consequence of the pandemic. And China became a major growth engine. And by 2022, the company was generating over $8 billion annually in sales, with nearly 30% of sales coming from outside of America. So it was no longer the brand of the stars and stripes. It wasn't just this preserve of the United States. It had cracked to a point the rest of the world. And the company branched into new categories. In 2020, I recall it acquired this high-tech business called Mirror. Do you remember that one, Mike?
Yes, that was a very of its time acquisition, wasn't it?
It
Because
really was. It really
the
was. I
home
remember.
fitness trend was really kicking off.
Oh yeah, yeah. My there was a friend of mine, a guy I know, in painting my house. I don't mean with an easel and oil painting. I mean literally painting the walls. And he had come back from a holiday in America, saying, "Oh, have you heard about a mirror?" Lululemon had bought it, and it was the first I'd heard of the product Mirror. And basically, it was like a floor to ceiling, not a floor to ceiling. What do you call those dressing room mirrors? The ones that are about human sized.
Yeah,
Um, and it was high tech. Like it kind of showed you how to move and bend and do exercises, and you're looking in a mirror. And I don't really. It was a little bit of Harry Potter wizardry going on. You're looking in the mirror and you're seeing something else, if you know what I mean, on how to move and bend. But they bought anyway. Lululemon bought this company just called Mirror for $500 million, and the idea at the time was to blend hardware, software, and their apparel into this kind of ecosystem where you could do your yoga at home and look in the mirror, and the instructor was visible to you as you looked in the mirror. But unfortunately, it just underperformed. They like integrations are so hard, and if your core business is um, manufacturing, branding, distributing apparel, bringing in a very high tech piece of kit and trying to make it fit into your portfolio is tricky, and integrations are tricky to begin with. So that was written down and sold off in 2023, which I didn't even know or notice until I started to research this segment for the podcast. I thought they still had Mirror. I just hadn't noticed it in any of their points of sale. And it was a rare misstep for a company really so accustomed to winning. So the real question that I have, it's an open-ended question, is where does Lululemon stand today, and is it a good investment? Now, if we were to look at its revenue per year, top line revenue, money into the till, it looks like if you look at 2021, 22, 23, all the way through to now, it looks like what's the best? Bashed up teeth. One is
yeah,
one longer than the next than the other. It looks like kind of like a cartoon character's bottom row of teeth. There's no rhyme or reason to it. There just
yeah.
isn't.
I
Yeah.
imagine an awful lot of what they're feeling the pain for in 2025 is through tariffs. No.
Oh, 100%, especially from posting Canada stuff from Canada down to America is fraught with tariffs, and I'll come on to that point. But just for the sake of our listeners, apart from revenue being up, down, and sideways a little bit, and apart from the fact that return on equity isn't all that glamorous, what I would say is this kind of niche metric. Well, niche is probably it's too strong word, but less than first metric you'd look at, which is EV divided by EBITDA, enterprise value. In other words, what you'd pay if you had to buy the whole business right now and write a check. EV divided by EBITDA, earnings before interest, tax, and depreciation and amortization, which is regarded as the least revenues a number that's least fiddleable you can't really fiddle with it as easily as you can with bottom line between R&D and depreciation, all that kind of crack. So you take enterprise value divided by EBITDA, it gives a fairly static read on how cheap or expensive the market is valuing that company at the moment. It's a trend line, it's a single line, and the lower it is, the historical lowest the share price has actually been. And although I probably won't get a Nobel Prize for the explanation of EBITDA, EV divided by EBITDA there, what I would say is it's at its lowest. It's on the floor. The stock price has been completely maligned, destroyed, melted down. Like in December last, 28th of December, a couple of days after Christmas, Lululemon was about 508 bucks a share. Right now, it's about 168 bucks per share. So what we're saying and what we said at the top of the show, as we did a segue from AI to yoga pants, like this business has really been trashed, and hence it being the worst performer in the S&P 500 this year. And as of now, the business is absolutely at a crossroads. But the company still is a giant. It has nearly 800 stores worldwide. It has a market capitalization in the tens of billions, but cracks are showing. So let's just get down to numbers, because that's how, unfortunately, the short term is measured for stock price movements. Well, in Q2 2025, revenue rose 7% year on year to about $2.5 billion, which is quite a cry away from a multiple of that a couple of years previously. And a 7% growth, as you and I know, and as I think all of our listeners know, year on year is not that glamorous. International sales were the bright spot, and China was up 25% year on year, and rest of the world, which is this big broad term used to describe everywhere except America, was up 19%. However, America, which still, and when I say America, I mean the United States of America, still makes up 70% of Lululemon sales, and it was flat. Revenue was up a shave, I think it was up 1%. And comparable sales, comps as it's known in the world of retail, where you take this shop and compare the exact, compare each shop to itself 1 year later, the comps was actually down 4%. And that's a very important number in retail and in restaurants, because it's harder to fiddle with, because you can't mask it by opening new shops. So if I
Yeah.
had 100 restaurants and next year 200 restaurants, and I said that revenue was up 50%, well, what you want to know is what's the revenue per shop or per restaurant. So comps were down 4%. That's not a good look. And net income fell slightly to about $371 million, and gross margin contracted, and as you said, it was pressured by tariffs and markdowns. And this CEO, Calvin McDonald, who I think is an impressive character, when I've listened to the guy, he acknowledged the US weakness. I mean, he couldn't do anything but, you can't say that didn't happen. And he called Lululemon's loungewear and social offerings stale, which worried me greatly, Mike, because I don't want him to change their ABC pants, which are a gift from God, if you ask me. I was like, no, 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 no. They're
But
fine. Don't go changing them.
it is an interesting wording, because you mentioned, and I know like it was only a small survey, but you mentioned one of the comments, and it was like, yes, the kids and the mums still wearing them and loving
Yeah.
them, and X and Y. And like, is that what you want to see in terms of your brand? And I don't think that was Lululemon 5 years ago. I don't think it was a kids and moms brand. and
Yeah.
and him coming out and saying it's stale might be indicative of a wider problem, because you
Well,
can look at a lot of factors in terms of, especially like US slowing down. 100 $150 yoga pants are very discretionary spend, and that could be people feeling the pinch. But in terms of branding, I think this is where a lot of the damage has been done. Is it become, as he said, stale?
mm,
Is it what 22-year-old people are wearing now, or are there new things coming in? Is like, I remember the big threat, and this was last year when people were getting worried about this, was the development of the brand Aloe, and I think it had a
oh,
lot
yeah,
of influencers behind it
that's
and all
right.
the rest. And
Yeah, yeah,
it seems like those concerns have really played out. Now I know there's more behind this than just brand damage. I think
Mm.
its supply
Mm.
chain is definitely
Yeah.
under the microscope as well with tariffs and all the rest. But in general, it does seem like Lululemon, as in terms of brand power, just doesn't have the same ring to it as it used to. Would
Yeah,
that
I
be
agree.
fair?
Well, I think I used to always say I don't invest in finance and fashion because they're too fickle or too difficult to understand. I used to had pharma in there, the three Fs,
Yeah.
but fashion, pharma, and finance. But I've actually breached those rules multiple times over the years. It's not quite true, but they either suffer from a fickle nature or from a excessively complex nature. But yeah, there are definitely listeners to this show who understand fast fashion and retail and have a greater sense for where the line of success begins and where it ends. Because even to our listener who commented on the Twitter account about, I mean, say my ex account on moms and kids, like I would have thought, like, isn't that true? Yeah. So, but that's not that's that's the head of a 50-year-old Irish dude who never sold fashion. Like maybe they only want 20-something-year-old New York females drinking frappuccinos. I don't know, but you're dead right. I mean, the point you made there, the activewear market has become brutally crowded. Like whether we're talking about Aloe or there's one called Vori, VUO or I, which my sister-in-law is part of the New York set. She's a big yoga person. She's amazingly into yoga, and she's gone off to study it with yogas or yogis or whatever they call it in India. And she said Vori is the brand on the up. Then there's Gymshark, and it is brutally crowded. And I think young customers, as we saw what Under Armour benefited because young kids did not want to wear Nike because that was the brand their parents wore. And I just wonder now, are the kids ultimately going to go towards Aloe or Vore and Gymshark because their moms wear Lululemon? I don't know. I mean, it's a kind of a convoluted equation, and fast fashion players like Zara and Shein, I mean, they churn out cheap alternatives. So there's also this other cycle, like sine wave in the background I've observed, which is the move to the anti-brand. Like people sometimes go, I don't want any brand. I don't care. I'm too cool for that. I don't want any logo on my gear. And it's a tough one to call, but I can tell you what analysts are saying. I have three analysts' views, and we don't usually lean on other people's opinions, but I think it's interesting. Morgan Stanley argued Lulu's valuation should resemble a specialty retailer as opposed to a high growth disruptor. So there's one opinion. Jeffrey said that the brand is, quote, becoming less relevant and has forecast sales declines throughout 2026. And William Blair pointed out that 40% of Lululemon's mix is non performance apparel, which is precisely the segment dragging on results. And then when you bring into that, all of that huge mix is the very point that you said to me earlier, Mike, which is tariffs and the end of the US de minimis exception, which means that Lululemon can't ship small packages tariff free from Canada down into America or the US, uh, which the company estimates will dent profits by 240 million this fiscal year. Like a quarter of a billion is quite the body blow to profits as a consequence of revenue. And we've all seen and observed President Trump's approaches to tariffs, and we know it will have an impact downstream and on this one particular stream of yoga pants in the United States. It's going to hurt Lululemon by $250 million, give or take. And the CFO, her name is Megan Frank, she acknowledged price increases and cost mitigation will only partially offset the blow of tariffs. So tariffs are real and they are very much. So the question is, what are its prospects? What's Lululemon's prospects for the future? Now, despite all these struggles, and it's in the eye of the storm at the moment for all these various reasons, it's hardly finished. I mean, I asked one of the AI models to calculate the probability that Lululemon will be alive, well, and larger in 20 years. And I said, don't give me any words, just give me a percentage. And it said 72%. There you go. So, like, I really should have gone deeper and went, how did you calculate that? what I thought was interesting was that with all the information available to it, AI reckoned, yeah, it's probably going to be around in 20 years. Well, if I just used the head stuck on top of my neck, I would be inclined to think that Lululemon will manage its way through the year ahead, the 5, 10, and 20 years ahead. But back to the poll I mentioned at the very top of this segment, really what Lululemon has is a powerful brand. And 82% of the handful of people who answered my question don't and who have bought the product don't just like it, they love it. I love Lululemon. I no longer think about where am I going to buy my next trousers or top. I just go to Lemon and buy the stuff I know and it remembers I was there and I can just throw it in the basket and off I go. But not to say that an anecdote makes data and every shoppers are different. And, if I encountered a brand that was warmer in the winter and cooler in the summer, but it was the same trousers, I'd be like, oh yeah, I like that. That's great. So it does have an incredibly powerful brand. It has extremely loyal customers, and it does have international momentum. And the question I think is, can it reinvent its product mix? And can it fend off the competitors? And the CEO, McDonald, he's good. I mean, I'm impressed. So, like, let's just say before I move this storyboard in for a close. So, on the positive side for Lululemon, categories like running and training and yoga are obviously very strong. I mean, that's what it does. That's what it's known for, and they're defensible and to a point, and they have technical segments where Lululemon still absolutely commands respect. And I don't think there will be a day where someone scoffs or scorns at someone wearing Lululemon gear. Just there are other things there. It's the buyer's choice. The second thing is, I mean, China and Asia Pacific are growing at double digits, and uh, no one can argue against us. I wouldn't say infinitely long runway in those markets, but there's huge runway in those markets, especially if you're a hot trend. And then, of course, as I mentioned already, management plans to increase new products to 35% of assortment by spring 2026, up from 23% now. And again, if that's executed well, it could refresh consumer excitement. And then Lululemon's grassroots brand things, the free workouts, the ambassador networks, the drinking, what they call that grass thing,
Matcha.
lemongrass. No, those. Oh, fuck, what's it called again? This green grass they crush down in a juicer and you drink. It tastes lovely. Oh, I've forgotten. It's some kind of. Anyway, look, they do all this lovely stuff. But then on the other hand, so that's all the reasons why Lululemon is good and may be better in the future. 70% of revenues are still in America, and stagnation is dangerous. 70% is a lot. Athleisure is trend driven, and if the new colors and cuts and whatever it is that come out in the months ahead fail, it will further hurt the business. And penultimately, investors no longer treat Lululemon like a hyper growth stock. It's like specialty retailer. Is it a kind of specialty? And then finally, past exclusivity issues like no plus sizes, it still perhaps overshadows the business. I'm not too sure if it's much of a thing, but competitors with more inclusive positioning could grab the minds and hearts of the younger buyer, the 17-year-old who is coming into the springtime of their yoga life, you might say. So the absolute answer will come from the court of public opinion. There's no doubt about it. Like when you just think about every fashion company that ever existed, really, it's all about how are your products perceived, how do they make you look and feel, and that level of desire. Because at the end of the day, clothing serves far more function than just keeping us warm and dry. And Lululemon's journey from Chip Wilson's controversial Vancouver studio to this mega powerhouse that even is here in Ireland with a Lululemon store on Grafton Street in Dublin and heaven knows where else is really one of the most remarkable retail stories of the last 25 years. It's like another Nike. I think a lot of our listeners, and we certainly know the Phil Knight story, and I think the Chip Wilson story is kind of an alternative version to that. And it has created a new category. But don't forget, Under Armour created a new category with their compression wear. They had these moisture wicking tops and the heat gear and the cold gear and all this stuff that mountain climbers and rugby players and the rest wore underneath their tops, and they created a category. But Lululemon has done the same, and it's built this kind of community driven brand. But like success will always breed competition, and I think in 2025, 2026 and beyond, Lululemon is going to have its biggest battle yet, which is all these other brands that we spoke about coming into the marketplace, coming in to eat their lunch. And the next chapter will determine whether Lululemon remains the defining activewear brand of its generation, or become more like Under Armour, if you know what I mean, which is, it's no longer super cool. It's just up there on the shelf beside all the other stuff. So in conclusion, Mike, you've sat there listening to me rabbit on about Lululemon, and I know you know the business, and we've spoken about it. If your fictitious nephew handed you their savings $100 and said, Uncle Mike, I think I want you to buy me Lululemon, or whatever you prefer, would you buy Lululemon for this nephew?
No, I am concerned about the Under Armour comparisons, even though they've gone about it very differently. Like Under Armour's brand value is diminished from kind of selling cheap and doing the third party retailer thing, which Lululemon has done the opposite of. It's actually, we compared them in the past very favorably to Under Armour because they controlled their buying experience so well. But I do think you talk about the court of public opinion, and you talk about me and you aren't really the people who Lululemon care about. It'll be 20 to 25-year-old women, I imagine. And if it loses its core market there, because it's great, yeah, that they have stretchy pants for men, but the yoga pants are the core of the business. And if it
Yeah.
loses that,
And the fact that I like their gear makes it less desirable
yes,
for somebody else.
it's
No question about it.
the mums and kids issue that you said at the start of the show. So yeah, I would be more concerned about that than anything else, because that, for a clothing company that has been perceived as very trendy for so long, for them to lose that could be the kind of, not obviously not the nail in the coffin, like, as in they're still going to be around and they still produce high quality clothes and people are going to buy it, but I don't know if it's going to be on that same pedestal as it was. So that would be my concern. And I would, my nephew would be going Lululemon free anyways in his portfolio. Can wear whatever he likes.
Yeah. If he could only invest in his money in Lululemon, or what was the AI company you spoke about at the top of the show?
Nebius. Jesus, I don't know about Nebius either, but for now I know where I put the money. Yeah.
Where?
And I'd put it in not Lululemon, essentially.
Nebius. Okay.
Yeah, the trend is your friend.
Is it Nebulous or Nebius? Sorry.
Nebius, Nebius.
Nebius. Oh,
yeah.
I probably did see it last night.
Yeah.
Life moves fast. Anyway, very interesting little chat we had about two companies that may or may not be giants in the next few years. For what it's worth, I actually am quite intrigued by Lululemon right now. I wouldn't buy, I would certainly have it on a hot watch list, because I believe its brand is more like Nike and less like Under Armour. And what I mean by that is, I think it's going to turn out to be less vulnerable to the fickle nature that UA, and the problems UA experienced were actually quite different with discounting and going into these big Woodbury common outlet type stores. But I actually think Lululemon will rise again, and really what I'll be watching is the new gear. So when they release their new gear, I'll decide if it's nice, and then I'll go, yeah, I'm going to invest millions based on this.
Very, very interesting tactics. 25 years in the stock market. This is what it's come down to.
Yeah, I always say that tongue in cheek. But yeah, but definitely. And actually, I'm 31 years
31
investing.
Years,
but let's not spread hairs. Getting pedantic, follow me on Twitter, I'm at El Savage. But okay, so what else? What remains, Mike? All that remains is for anyone who hasn't signed up for free trial to profit to do it, because if they don't, they'll regret it, because we're going to do something. But you can get 7 days free trial at useprofit.com/MWS7.
Perfect. Okay, Emmett, thank you for joining me. Thank you, everyone, for listening. We'll talk to you next week.